Today, propaganda says rental crisis is easing, but don't believe it. Hello again, it's Martin North from Digital Finance Analytics. Well, that is post covering finance and property news. Those in the rental sector of the property market, a growing proportion of the population, by the way, are in the crosshairs of the affordability crisis. Indeed, as discussed in my live show on Tuesday, around 76% of those renting have cash flow deficits or are in rental stress. And I keep getting stories of people being confronted with a 15 to 20% rise of the rent on the property that they're living in at the moment. Not pretty. The latest data from the ABS reported that rental prices rose 6.4% over the 12 months to the December quarter, down from 6.7% in the September quarter. Rental price growth, they say, continues to reflect low vacancy rates and a tight rental market. However, the September quarter result shows a partial impact of the Commonwealth Rent Assistance changes, while the remaining impact will be reflected in the December 2024 quarter. Excluding the changes to CRA, rents would have increased by 7.8% over the 12 months to the December 2024 quarter. And in their monthly series, released at the same time, they said that rents increased 6.2% in the 12 months to December, following a rise of 6.6% in the 12 months to November. And in monthly terms, rental prices rose 0.3%, following a 0.6% rise in November, and that easing rental price growth reflected recent increases in vacancy rates across most capital cities. CoreLogic said that on an annual basis, Australian rents were up just 4.4%, which is still more than double the pre-COVID decade average of 2% annual growth. However, with rental growth slowing more visibly through the second half of last year, they said the annual change in rents is likely to fall to below average levels in the first half of 2025. And they also said that rental growth bounced slightly higher in January, up 0.4% over the month. In fact, every capital city recorded a subtle rise in rents over the month. However, the trend, they said, is clearly pointing to an ongoing easing in rental price growth. The 6-month trend in rental growth has turned negative across the two largest markets, Sydney and Melbourne, they said, with rents down 0.4% and 0.6% respectively, with larger falls across the unit sector. The remaining state capitals have all recorded a clear slowdown in rental growth as net overseas migration and larger households have helped to ease rental demand. Finally, Tim Lawless said renters are seeing some relief after a period of extreme rental growth. Over the past 5 years, capital city rents have surged by 37%. The previous 5-year period saw rents rise by just 5%. Hence, the recent headlines about Australia's rental crisis is easing on the back of data from both the ABS and CoreLogic. Oh, and to cap it all, according to a recent Yahoo Finance article, some rental properties in Sydney and Melbourne are offering free rent to try and entice new tenants as the market passes its recent boom. Landlords are offering free rent in a bid to secure tenants as the pendulum swings back following years of rental hikes. While the rental market remains competitive, there are some properties in areas of Sydney and Melbourne where landlords are advertising as much as 2 months of free rent. That includes a 4-bedroom and 2-bathroom house in Sydney's Cabramatta. It's currently priced at $880 a week and offers 2 weeks free rent for the successful tenant. In Melbourne, new units in a Docklands building offered 8 weeks of free rent, with studios priced at $570 per week and units at $715 per week for a 1-bedroom and $910 per week for a 2-bedroom and $1,460 a week for a 3-bedroom. And for that $1,460 per week unit, 8 weeks of free rent would translate to $11,840. Now, whilst this might be true at the margin, I would highlight that such properties are a bit unusual and tend to be at the expensive end of the market, where there perhaps is more stock, particularly, of course, among new builds. But the story is different more broadly, and let's be clear, The real data shows that growth in rents is still moving up faster than overall CPI, which I concede is falling somewhat, and of course, real wages growth. So, can we really say that things are improving in a sustainable way? Well, actually, despite the evident slowdown in rental growth, tenants are still grappling with record high asking rents across most of the country. And of course, one of the key indicators of future rental growth is vacancy rates. And here it does appear that the Australian rental crisis continues, with the vacancy rate tightening once again, with further falls off the back of low supply and increased migration. The latest rental vacancy data from SQM Research shows that the national vacancy rate fell 0.5 percentage points in January to just 1%, with the number of homes available for rent across Australia dropping from 47,336 to 31,822. The vacancy rate was also down 0.1% year over year. One of the factors here, as I discussed on Tuesday, is that some property investors are quitting the field because the returns from that investment property, because of high mortgage rates, is turning negative. SQM Research Managing Director Louis Christopher said the sharp decrease in rental vacancies strongly indicated Australia's rental market crisis was not over and could deteriorate further. It looked like there was an easing in the vacancy rate at the end of 2024 and we were coming out of the rental crisis, but that's not the case now, he said. The rental vacancy rates have tightened up once again to some of the worst numbers we've seen during the rental crisis. Some cities have hit record lows or are close to record lows, and there are some cities recording vacancy rates below 1%. Hobart is just 0.3%, which is the lowest since our records began in 2005, and Brisbane fell to 0.8%, which is the second lowest vacancy rate we've recorded for the city. We have got some February weekly listing numbers already, and the numbers are lower than we had in January. Louis Christopher said an undersupply of housing combined with increased migration could be responsible for the strain on Australian rental markets. We know one factor for sure that is causing the rental crisis. We continue to underbuild in Australia, and we're at a new low record of dwelling completions, he said. Over and above this, our concern is what is currently not known, and that is the real present level of overseas arrivals. We don't know the migration numbers for January, but I suspect there has been a surge. Clearly, something has driven this retreat in rental vacancies. Canberra saw the greatest drop in available rental properties last month out of the capital cities, with the vacancy rate down 0.9 percentage points to 1.3%. Sydney and Melbourne each dropped 0.7 percentage points in January to see the vacancy rate of 1.4% and 1.5% respectively, while Darwin dropped from a vacancy rate of 1.7% to 1.1% between December and January. Brisbane's vacancy rate dipped 0.4 percentage points month on month to 0.8%, while Perth and Adelaide were both down 0.3 percentage points to 0.4 and 0.5% respectively. Hobart recorded the lowest vacancy rate of the capitals in January, down 0.3 percentage points to just 0.3%. Christopher said vacancy rates tend to tighten at the start of the year, but this was worse than expected. We are recording higher vacancy rate increases compared to this time last year, with the national vacancy rate tighter than in January 2024, he said. The SQM research report shows the median average weekly rent in Australia dipped 0.5% to $643.24 in January. House rents remained unchanged month on month at $718, while unit rents dropped 1.2% to $557. Across January, rents were up 2.3% in Perth, 1.7% in Melbourne, 1.4% in Sydney, and 1.1% in Canberra. Rents were also up 0.6% in Brisbane and 0.3% in Adelaide, but they were down 1.7% in Darwin and 2.1% in Hobart. Louis Christopher suggests that the tightening may not be an anomaly. From a tenant's perspective, the sharp drop in rental vacancies at the start of 2025 is highly disappointing, especially since there were some glimpses of a moderating rental market at the end of 2024, Christopher wrote. So the question is, of course, is this a one-off anomaly? Unfortunately, I don't think it is, he said, as our records of February listings to date are lower than what was recorded in January. As a research house, we are aware of the ongoing underbuilding that has occurred, and over and above this, our concern is what is not known, and that is the real-time present level of overseas arrivals. Could there be another surge in migration levels in recent weeks? We don't know for sure, but clearly something has driven this retreat in rental vacancies, Christopher said. Now, one factor could well be a significant surge in overseas students starting the new year, but we'll have to wait and see about that too. Underlying this, of course, is the Australian Treasury's Centre for Population projection that the national population will be ballooning by 4.1 million people over the coming decade, with most of those new residents landing in the major capital cities. So, if the federal government continues growing the population faster than new homes can be built, guess what? The rental market will remain tight. The number one solution to Australia's rental crisis is to significantly lower net overseas migration to a level compatible with the nation's ability to build housing and infrastructure. But don't expect to hear that as a policy platform in the upcoming election, because more people flooding into the country is the only way to avoid a real recession. So we can expect the rental crisis to continue and Australian tenants to bear the brunt. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.